Good morning, everyone. Welcome to November 1st Market Minute. I'm John Hopkins, president of Invested Central. Right now, we get the Dow futures up 5, S&P futures are flat, and NASDAQ futures are up 5. Both Asian and European shares were higher overnight. Futures were higher ahead of the bell on Wednesday as traders got back to work after a long layoff. The market did open higher, but Chicago PMI and ADP reports were weaker than expected, with the market slipping. By the time the market closed, the Dow and S&P had barely budged, while the NASDAQ lagged. Today we'll get weekly jobless claims, productivity, and unit labor costs at 8:30 a.m., then ISM Index, construction spending, and consumer confidence at 10 a.m. Today we'll get earnings from Chesapeake Energy, Kellogg, LinkedIn, Priceline, and Starbucks, to name a few. On the S&P, we've got the 20-day moving average at 1431, the 50-day at 1434, and the 200-day at 1377. The S&P closed at 1412 with support at 1403 and resistance at 1434. It's been a very long time since the market was closed for 2 full days due to weather, but traders were ready to move into action right when the market opened at 9:30 a.m. Eastern on Wednesday. The market started out fine but retreated later in the day, with the S&P getting as low as 1405 before closing flat for the day. The problem today remains the same. The S&P is technically broken, plain and simple, with the 20-day moving average now below the 50-day, and unless the bulls move into action quickly, expect more selling. If the bulls can move the S&P back over 1434, that would be the first move towards technical repair. Earnings season is winding down and could soon present some nice trading opportunities. Just try to key in on those stocks that had strong earnings and held up better than those that missed. Then watch for an orderly pullback and then make your move. This is John Hopkins. I'll be back tomorrow morning with another Market Minute.